All right, be honest with me for a second. When you hear the word investing, what's the first thing that pops into your head? Is it a sweaty guy in a suit yelling buy, sell over 6 computer screens? Is it complicated stock charts that look like an EKG for someone having a heart attack? Or maybe, just maybe, you picture your future self sitting on a beach somewhere sipping a pina colada because your money is working for you while you relax. Look, whether you love the idea of investing or it sounds scarier than your Wi-Fi bill after a streaming marathon, today we're going to break it down. No suits, no jargon, no 6-hour finance lectures. Just a simple, beginner-friendly crash course on how investing works and how you can get started
in about 5 minutes. Yeah, you heard me right. You can stick around for 5 minutes. You've scrolled TikTok for longer than that today. Why should you even care? Here's the deal. If you're not investing, your money is basically taking a nap. A really long, unproductive nap. Sure, it's chilling in your savings account, but thanks to inflation, aka the sneaky villain stealing your purchasing power, it's actually losing value over time. Meanwhile, the folks who are investing, their money's out there working, growing, multiplying. Kind of like that one houseplant you forgot about that somehow thrived anyway. So, if you want to actually build wealth, buy that house one day, retire before your knees give out, or just stop living paycheck to paycheck, investing is how you do it. Quick example time. Imagine you plant a tree. At first, it's tiny, kind of unimpressive, but give it time, and eventually that tree grows apples. You eat some apples and plant a few seeds, and now you've got more trees, which make more apples, and suddenly you've got an entire orchard. That's investing. Your money equals the seed. Time and patience equals the water and sunshine. The apples, that's your returns. And yeah, the earlier you plant your seeds, the bigger your orchard gets. But what happens when the market crashes? Ooh, good question. Because yeah, markets don't just grow in a straight line. Sometimes they fall hard. People panic, news anchors freak out, your uncle at Thanksgiving starts yelling about the economy collapsing. What should you do when that happens? How the market actually works. Think of the market like a roller coaster. It goes up, it goes down, sometimes it feels thrilling, other times you want to puke. But unless you jump off mid-ride, which please don't, you eventually end up higher than where you started. That's how stock markets have behaved over the past century. Sure, we've had crashes, 1929, the dot-com bubble, the 2008 financial crisis, and yeah, that wild ride in 2020 when everything from toilet paper to stocks disappeared overnight. But here's the thing. Every single time, the market recovered, and over the long haul, it kept growing. Common investing mistakes, aka how to sabotage yourself. Let's be real. We all make mistakes. But in investing, some slip-ups can cost you big. Here are the greatest hits to avoid. 1. Panic selling. The market dips, people freak out, sell everything at a loss, and lock in their losses. It's like quitting a marathon at mile 3 because you got a cramp. 2. Chasing the hot trend. Remember crypto in 2021? Or meme stocks like GameStop? FOMO kicks in, people buy high, then the hype fizzles, and they're left holding the bag. 3. Not starting early. I'll invest when I have more money. Yeah, future you is going to regret that. Even small amounts invested early can grow into big amounts thanks to compound interest. Weird, fun investing fact break. Okay, time for a brain snack. Did you know if you invested just $1 in the US stock market in 1926 and never touched it, it would be worth over $13,000 today? Yeah, one lonely dollar. Sure, 1926 was nearly a century ago, but it shows the crazy power of long-term investing and why patience beats panic every time. Investing pro tip number 2, automate it and forget it. If you wait to feel ready to invest, spoiler alert, you'll never start. But if you automate your investing, set up small, regular contributions to a retirement account or index fund, it happens without you thinking about it. It's like a money subscription box, but instead of socks or snacks, you get financial growth. Real-world application. How do you actually start? Let's say you're convinced. You want to invest. But how? Here's the simple starter pack. Open an investing account. Think a brokerage account or a retirement account like a 401k or IRA. Start with index funds, or ETFs. These are bundles of investments that track the whole market. Super beginner-friendly. Invest consistently, even if it's small. $20 a month, $50? Cool, it adds up. Don't obsess over the daily ups and downs. Remember, roller coaster, long ride. Look, you don't need a finance degree or a crystal ball to be a successful investor. You just need time, consistency, a little patience, and the courage to start. The best time to invest? Yesterday. The second best time? Right now, even if it's with pocket change. So, don't let your money nap under your mattress. Wake it up. Send it to work. Build that financial orchard, one apple at a time. And hey, 5 minutes ago, investing probably felt overwhelming. But now, you've got this. Smash that like button, subscribe for more money wisdom, and let's turn financial fear into financial freedom.